G'day folks, welcome back to Pete's Investing. It's the 20th of January 2024. This is a nat gas price update along with some ETFs including Boyle, UNG and KOLD. We've still got a medium term bearish outlook, or medium to, well at the moment it's medium term. I'll explain what medium term means. I had a question from one of the viewers. I'll explain what medium, long term and short term means, in my view at least. And also watch out for a divergence which is still playing out. So first off, we'll talk about the natural gas commodity price. Now we've got the weekly, daily and hourly timeframes. And now, first let me answer that question in terms of what medium-term bearish means. So you can see here, my opinion at least, of course this can be subjective and it's also relative as well. So for me, medium-term is something like, if I'm looking at these timeframes, medium-term means more like the current, say, daily and less than daily outlook. At the moment we're bearish on the daily and the lower time frames. Longer term I'll consider weekly, and again it depends on what you're trying to do, what you're trying to achieve. Weekly for me in this particular instrument, I consider this more of a long-term trend. So long term I consider natural gas going sideways, and medium to short term they're dropping and going bearish. Now, of course, it depends what you're trading. So in this case, we're trading the commodity price, and we're very likely trading something like the intraday charts, like the hourly, 2 hourly, 15-minute, 4 hour, etc. So if you're trading shares and buying shares of a company, generally I look at the weekly and the daily. And that, to me, the daily is short term and the weekly is long term or medium term. So it's all, I suppose, relative and subjective in terms of how you look at it and how you play the approach to it. Anyway, back to natural gas. The commodity price for natural gas is going, as I said, sideways on the weekly. It's in a bearish mode on the daily and bearish as well with further decline on the hourly. So, and also look at, and for those new to the channel, I'll look at the CCI 400 as a trend indicator and look at the CCI 150 as a divergence indicator. So you can see here the CCI 150 has dropped off where the lower highs versus the price having higher highs. It dropped off once at another divergence and dropped off a second time, and that's called a bearish divergence. On the daily, we again, it's going bearish. It's broken below its moving average on the CCI 400. You'll notice on the 150, when it typically the 150 tracks in line with the price, roughly. You can see there, if you get lower highs like it is there, and we did have lower highs back on the weekly as well, but on this time frame we've got lower highs versus higher highs on the price. That's called the bearish divergence, and that dropped off and hit our target area. Now you also notice the price has come down and almost just short of this support at 22.58, and that's going to be a key support area to watch. We did have a slight bullish divergence on the CCI on the hourly chart. Now I can still consider that a bullish divergence, because as long as that CCI remains higher than that entry point and the price keeps falling, I'm going to consider that a bullish divergence. If that CCI drops lower than that point there, then it invalidates the divergence, and we take all those divergence indicators and lines out of the chart. But at the moment you can see there the 1 hour chart's still falling, but we might have a bit of a bounce based on the CCI 150 at least, and that's pretty much a double bottom at the moment versus lower lows on the price. And let me just recalibrate that Fibonacci down to that low, and again, depending on if it bounces from there, I said if it bounced from there last time, that will be our target area. Now because the price has declined, we're going to say if it bounces from there, our new target area is going to be down about there in terms of a retrace at the minimum. That's the natural gas chart. Next we'll go to the ProShares Ultra DJ UBS ETF, which is BOIL ticker. Again, we've got a bullish divergence, bullish momentum on the weekly, bullish on the daily, and we've also broken down and made new lows on the hourly chart. And again, you can see there it's approaching this support line at 23.80. So yeah, just keep an eye on that. Again, no sign of reversal yet. United States Natural Gas Fund with a ticker of UNG. That's bearish on the weekly. It's pretty much sideways on the daily. It's still, the moving average is trending sideways, and the CCI is above that moving average. The CCI 150 is tracking in line with the price, so there's no divergence there. And on the hourly, it's broken below the moving averages and still declining. And that is a continuation of that decline on the bearish divergence on the CCI. You can see there it fell off versus pretty much a double top on the price. It fell off, hit our target, and it's still falling. And again, that's approaching this 453 support area. Lastly, we'll look at the ProShares Ultra Short Bloomberg Natural Gas, KOLD ticker. That's pretty much sideways on the weekly. That's broken up again and touched its moving average on the daily. And again, the CCI 150 is moving in line with the price. And on the hourly, we've made a new bullish movement and it's actually broken to the upside. And the CCI 150 is also making new highs. And you notice here as well on the price has just leveled off at the 61% level. Now, 61% is always key. It could always bounce at any one of these Fibonacci levels, but the 61% is a key one. And if it can actually bounce down from there tomorrow when the market opens next week, or if it breaks higher than that, we're going to see a continuation. And there's currently no sign of a pullback based on the CCI at least. So what I want to start doing now is showing you a trading strategy with my videos as often as I can. And today we're looking at the natural gas price and where it's trending. So at the moment, as I said, the weekly on the natural gas is trending sideways to bearish. You can see there it's broken below its moving average, bearish, somewhat bearish or sideways on the weekly, bearish on the daily. And we had a previous very slight bullish movement here, but it's sort of the CCI was still moving average was still moving sideways. So I would have still considered that a very slight bullish movement on the daily only, but bearish back here, and then bullish during that period, which is most of 2023. So let's blow up the daily chart, and we're going to do, and I'll show you predominantly the bullish trades made, should you have made them back there. So again, this is most of 2023, and what I've done here is I've added a zero lag indicator, and you can see here we've got a moving average of that zero lag. So the zero lag indicator is showing periods of 20 and 10. So when the 10 period moves above the 20, that's a buy signal, and when it closes down, it's either a sell signal or a close out of the long position. So basically the opposite is true if you're going short. When it breaks down from the 10 breaks down below the 20 period, go short and close it out when the 10 breaks above the 20 period. So that's the indicator. Now I've also added because we're going long predominantly during this period, I add a buy sell signal indicator back here. So for example, back there when it breaks above the 10 breaks above the 20 period, you buy it and you close it out when it breaks below, and so on. So that would have been a nice little way of trading the daily using that zero lag indicator. Now of course, during that period when it hit the divergence versus the double top, almost a double top or a bullish divergence on the price, you would have, when it saw that peak, you would have noticed that would have been a divergence, and you would have possibly, you still probably could have traded that had you wanted to trade that on the daily, but you would have been wise to watch the CCI predominantly and say, okay, it's falling off, avoid going long. So you would have avoided going long during these periods until such time it breaks above the moving average, and then the moving average itself starts trending upwards. But that would have been a very risky area because you didn't really break to the upside. It still actually broke below the moving average. So again, back here, for example, if you're going to trade the short side, I would hide the long positioning and open up the short sell periods. So you can see there when you start seeing the divergence, you would have possibly stopped trading long because the CCI 150 is trending against the price. Stop trading long and wait for it to start breaking down here up to this point, and you would have gone short there. Let me just remove that Fibonacci. You would have gone short there and closed it out there because the zero lag indicator broke just above the 10, broke above the 20 period. Go another short period there, and there's another close entry there. Then once the CCI starts breaking up, stop taking short trades and wait for the CCI 400 to break to the upside with the moving average also breaking to the upside. So you would not have entered long yet. And even here, you probably would have not entered long. You would have probably missed that opportunity to go short. So you wait for the next opportunity to go short once the zero lag indicator crosses over again. So let's look at some economic viewpoints. So again, with some key trends and developments. In terms of price movement, upward pressure can be impacted by the exports, increased demand for US LNG in Europe and Asia. Storage levels can have an upward pressure movement on that. So basically, depending on the time of the year, raising concerns about winter supply adequacy, and also geopolitical tensions with the wars in Ukraine, etc. There's also downward risks with economic slowdowns, potentially for weakened global economic growth and lower energy demand, impacting prices. And warm winter weather can also have an impact, with milder than expected winter temperatures could reduce heating demand and putting pressure on the prices. Other developments to look out for is supply and demand. So the supply demand with production expected to remain steady in the near term, with potential for increases from shale plays. Demand, increased domestic consumption for industrial and residential sectors, partially offset by lower electricity generation from natural gas due to rising renewable energy production. And technological advancements, carbon capture and storage, CCS, growing focus on CCS technologies to reduce the environmental impact of natural gas production and consumption. And LNG infrastructure, expansion of LNG export terminals and pipelines supporting increased export capacity. They're just some of the data sources for your reference if you want to look into it further. So again, we're looking at pretty much a bearish outlook at the moment, medium to short term. Watch for those divergence and take a note, and also try and develop your trading strategy, whatever works best for you. And thanks for watching. Hit that like and subscribe button, and we'll see you in a future video.